So I read, this isn't actually a few months old, this piece, but it was called How Robinhood Convinced Millennials to Trade Their Way Through a Pandemic, and by this guy, Rob Walker. It was a pretty good read about how Robinhood came up and this idea of learning. So they said a year prior to the crisis, Robinhood couldn't figure out why they had so many people who signed up for their system and their program, but never funded their account. So they made it in, they were waiting, their account was ready to go, they never put any money in. And Robinhood was starting to survey these people saying, what's the problem? Why aren't you investing?
Well, they're waiting for after the election. Duh.
What can we do? And they said the most common answer they got was it just wasn't a good time to buy. The market was too expensive. And so when stocks dropped, all these people who've been waiting for lower prices came in. Now,
I don't buy it.
That's what they said. Anyway,
they were
looking. Okay, you think he made it up?
They all bought the dip?
That's what I'm saying. I think people are learning. Even if these Robinhood people are speculating and they're buying potentially the worst stocks for themselves and day trading them, the fact that they were thinking ahead that far and not jumping in because stocks were going crazy before that, you laugh at me, and a lot of people do because human nature never changes, and I probably say this too much too, but I think people are learning and getting better. I think investor behavior is improving slightly.
Well, how about this? I do not want to be on the record taking the other side of that.
Yeah,
like I don't want to be the person dunking on young people.
I'm saying on the margins,
but
everyone always talks about how people jump in when things are going good and bail when things are going bad. This was the opposite. Things were going bad and people jumped in and bought. That's different behavior. You have to give people credit. Something is this year. Obviously, everything is a little wacky. That's different.
How about this? But here's the but. These are speculators and whatever. There's nothing wrong with that. But it's not as if these are people that are like building positions for retirement or anything. They're buying momentum stocks, which is cool. It's working. But I think it's a stretch to say that people are learning, that they waited for the pullback, they got the pullback, and then they bought stocks. That's not really what happened. The pullback came. Davey day traders started going nuts. These Momo names started going bananas, and then people chased. I think that's really more what happened.
Still, though, millions of people opened accounts during a pandemic, in a recession, in a 35% pullback. That's not nothing.
Yeah, it's great. It's great. I don't think that the narrative they're learning.
I'm not saying this is going to solve the retirement crisis, but I'm just saying eventually people learn stuff and it changes the way that markets react to things.
Okay.
So I gave an analogy. Every time that there's a sci-fi alien / monster movie, at some point in the movie, like the thing starts getting smarter and stronger, and the main character goes, "It's evolving." As they're trying, they're like covered in blood or sweat or mud. And that is the market. The market is the alien here. Where
okay, all right, good analogy. Let me ask you something. A Quiet Place 2. Did they put that on the shelf?
They pushed it back on the shelf, unfortunately. Because I loved the first one.
Love that movie.
Yeah, a lot of movies we've gone without.
That is such a theater movie.
Yeah, I guess so. And you told me the other day that you're really missing movie theaters because you can't pay attention enough without looking at your phone at your house.
Oh, well, what we were talking about, Kicking and Screaming.
Yes.
Which is not, it's not the Noah Baumbach movie. That's not an exciting movie. So
yeah, it's not a great movie, and you have to pay attention because it's very dialogue based.
Well, that's what you said. You said you really have to pay attention and listen, and it's hard to do that when you're sitting on a couch in a slow movie.
Right.
So anyway, that's an interesting point you make, but I don't know that I would put the narrative on it. That's all.
Yeah. My whole thing is just, even if you know what's coming, the reaction is always going to be what surprises you. And sometimes the surprise is going to be to the upside, sometimes to the downside. That's all I'm saying.
You've been on the record saying that one of the silver linings of this, and if I'm putting words in your mouth, correct me. One of the silver linings of this whole thing is that people are leaving the city and rents are getting way more affordable for younger people.
Yeah, I think that's true. It's finally happening for them.
So there's a chart showing year-over-year change for studio rents in Manhattan, and it's down almost 20%, which for young people, that's awesome. And same San Francisco, we spoke about last week, down 20%, I think, or more.
It's a big number, yes. And guess what? Young people are not going to be scared away from being in cities, I would imagine, right? They can wait this stuff out.
Yes. On the other side of it, talking about owning, mortgage credit availability is going down pretty sharply, unless this is a chart crime. No, it's down a lot. Here's a quote. There continues to be fewer lower credit scores and high LTV loan programs. The housing market overall is on strong footing, but the data show that lenders are being cautious given the spike in mortgage delinquency rates in the second quarter, as well as the ongoing economic uncertainty.
Do you think this has something to do with the fact that rates are so much lower now, and there's just such little margin of safety for banks giving out these loans now? Like when they're giving out 2.5% loans, that maybe they're getting. I mean, when I went through the refi process a few months ago, it was 3 months of back and forth and constantly asking me for more and more stuff, and I have pretty pristine credit score. Not to
did they ask you which?
I do.
Like, what's your credit score?
I don't know. I'm not gonna.
7, what? That's too personal. 770.
I don't know exactly what it is, but it's pretty good. I don't. Yeah, whatever. I
to
pay my bills off. Yeah, all that stuff.
So wait. So they were so thorough that they asked you which target date fund you're in.
Yeah. I couldn't tell them because I was changing it over in March because my risk tolerance changed. Yeah. So for some people, it's probably harder to get a mortgage right now then.
So a lot of the housing's on fire stuff that we've been speaking about is taking place on the upper end.
Yeah, that makes sense. Again, which is why, and a lot of people keep pushing back on us saying, we keep saying how the lower rates, that's the other side of low yields is you get lower rates to borrow. And a lot of people are pushing back saying, well, you still have to come up with money for a down payment.
That's true.
And so that's the other side of this, where maybe a lot of these people on the lower end just can't come up with a down payment money, and so they can't take advantage of the low rates.
Which is why we were bullish on companies like Unison that are going to help people with down payments. I think those companies are going to see a lot of activity in the coming years. Oh, speaking of which, this chart that Tadas Visconti showed us from Bill McBride. U.S. population for selected age groups, 20 to 29, 25 to 34, and 30 to 39. This chart is what Logan Motoshame has been talking about. He's been saying for a long time that this is a 2020 to 2024 story. He was on with Josh talking about this, about the housing market. And the demographics, I mean, we are in the sweet spot for housing. And so people are wanting to move because they're having kids and stuff. And so you're right. Like now is a great time to own a home if you have a down payment. And if you don't, and you still want to get a house, then companies like Unison and others are probably going to do fairly well in this environment, I would think.
Right. So it looks like the 30 to 39 age group is increasing by 4 million over the next decade, basically.
Is this the other side of there's 10,000 boomers retiring every day?
Yes, I tried to make that. So here's something I didn't realize. By the end of this decade, Gen X is going to surpass baby boomers in numbers because some of the baby boomers will be dying off.
Wow.
And so
are you an Xer?
I think I'm probably technically the oldest millennial in the world.
In the world?
If I don't know if 1981 is the cutoff.
You're the oldest millennial with the best credit score.
Yeah, so maybe I don't qualify as a millennial if I don't have a bad credit score. Hey, I had student loans, damn it. I count as a millennial. So millennials passed baby boomers a few years ago. Gen X is going to pass them at the end of this decade. So yeah, I think you could make
know that.
You could make the case that we could be doing a baton handoff from one generation to the next, and that millennials and Gen X is going to pick up the slack on a lot of this stuff from baby boomers.
Remember the whole what happens when they go to sell their stock? You don't see that too much anymore.
No, I think that's part of the inequality thing because so much of it is held by the rich people that it
Right.
doesn't matter.